in time, I'm seeing CPI come in at 6% in February. How is the street going to take this piece of news, Nadia? How do you see the markets react?
Hello. Well, to begin with, markets are kind of confused right now with what happened after the SVB bank collapse. So this is kind of confusing markets because in general, we did think that markets or the Fed's going to increase interest rates by 25 basis points. And then later on last week, we expected a 50 basis point increase after Powell's testimony in front of the Congress, which was a lot more hawkish than we anticipated. However, after the bank's collapse, now we do think that either the bank is going to reduce the interest rates to 0.25 by hiking at 0.25 basis points, or they're not going to do that at all. Markets are pricing in that right now, and we are seeing gold prices hover above the 1900s and with expectations of it going even higher. So markets are quite uncertain right now, especially with the latest inflation figures, although it is a significant drop, 6%. We did see the core CPI at 0.5%, which is a monthly increase, leaving markets a bit wary of what's to come next.
Nadia, about the SVB fallout, as far as hitting sentiment is concerned, how much has it really done so? And as far as the market action now that you're seeing, because markets have opened in the green, is this something that is going to sustain, or do you think it's a small blip and we're in for more volatility?
We're definitely aiming for more volatility. We did see consecutive lows for 5 days for all major indices. Definitely the banking sector or financials have been suffering the most. But there are some more lending and acquisition activities taking place from JP Morgan to the Republican Bank and so on. So all these activities and initiatives are saving the banking sector right now. So we are seeing quite some jumps in the banking sector as we speak. And obviously, if there are going to be the government intervention or the more lending and more funding, then definitely it's something that we're not going to relate to the 2008 financial crisis as Wall Street was already worried about since the beginning of the week. Things have somewhat cooled down, but it's still ruining sentiment. Sentiment's definitely risk averse, and investors are holding on to safe havens right now, pushing gold towards the 1900s and above.